All right, we are live. Okay, guys. Very quickly, we're going to be covering the technical aspects of Bitcoin. Not going to waste everybody's time. Going to go in fast. Right now, I think Bitcoin. I did a video a few days ago stating why dollar cost averaging into Bitcoin now is one of the worst decisions ever. Firstly, you miss the whole year's run, right? So I'm going to be covering that. This video is just going to help you identify good entries, right? I think identifying good entries is very important. So let's get to the charts. Let's not waste any time. Okay. So guys, this is Ethereum. Let's go to Bitcoin. Okay. Let's look at the 1 day first. Okay. Guys, we are clearly parabolic. So what I have just done is the 20-day, the 50-day, and the 100-day moving average. I'm going to be kind of tightening up the moving averages. I feel that 30, 60, 90 would be a little bit better, right? It just goes to show the 30 days, 60 days, 100 days. And then, if you want to put it up to 1 year, it's also possible. Moving averages give you the opportunity to kind of see why certain price points are going to be providing good support in a certain time frame or a certain window. Hence 20, 50, 100 literally means the past 20 sessions, the past 50 sessions, the past 100. Now, there's no hard and fast rule. Obviously, I think people who follow technical analysis will do 20, 50, even 150 to even 200. Now, you want to try to cancel out noise. As I mentioned, I'm not here to give you, like small scalping trades or whatever. I'm looking at places that will form great entry points. So right now, if like I said, I think one of my subscribers, Chris Cass, who watches my videos, says dollar cost average into BTC. Well, the answer is no. I also laughed at people who are trying to dollar cost average now because I just feel it's not the optimal price, guys. It's just not the optimal price. So it's gonna hold and have a new price support. That I'm pretty certain. Okay, Bitcoin will no longer be at the $4,000 mark ever again. Okay, but the likelihood of it being at the $4,000 mark is quite unlikely. So, as someone who does basic, simple technical analysis, right, where will the price hold? Okay, I feel that the price would hold roughly. I would do a Fibonacci first. So the Fibonacci is a way of kind of determining the overall potential pullbacks and price support. It's very accurate. Okay, so let's do the Fibs. I love doing Fibs because I feel that Fibs kind of gives you the ability to see the previous, and you'll be surprised. You literally have buys and sells according to it. You look at how nice, if you draw a Fibs, right, you see the fact that it hit the 0.5, there's a sell down. Okay, you look at this part here, although it only touched once, but that was the resistance at the time. So the 0.618 was the resistance at the time, especially after the pretty much sell down. Now, you can't always know where exactly the market decides to sell down. There was no real price history. Now, to kind of figure out why the market decided to bounce at 4,000, you can kind of look at the previous price history here. Okay, that's where it decided to bounce. It's very interesting, guys. That's why when you look at charts, right, it's just interesting to see consolidations and patterns. That's why I've always mentioned that although you may suck at mathematics or statistics or whatever, right, it's an art. Like, if you can kind of picture and see patterns in your head and you kind of can put everything together, right, you kind of will find a level, or you will start to see patterns form. But you have to kind of keep practicing. So standard Fibonacci is from the top to the bottom, or from the bottom to the top, depending on what you're trying to figure out. Okay, so for this case, right, we had a bull run, so obviously it's from bottom to the top. Right now, if you ask me, it's just too parabolic, in my opinion, right? A parabolic movement is literally a sharp movement upwards, so steep that you probably need some time, a certain correction, retracement before you identify that price point. And I think people shouldn't be too excited or too eager to buy into Bitcoin with their hard-earned bonus just yet. So that's what I wanna put out. So right now, let's observe and see whether the 16,300 mark will hold. Firstly, the 20-day moving average the price already is moving below the 20-day moving average. Okay, then what would form a very good support or potential bounce would be the $16,300 mark. Okay, let's just round it up. It's 16,300. That's the first barrier or first test. Because prior to that, right, unfortunately, I'm using the GDEX exchange at the moment, which is Coinbase's exchange, right? Coinbase's exchange. So I don't think there's a I don't think there's a is GDEX? I haven't used GDEX in a while. Is it GDEX Coinbase or is it? Yes, it's Coinbase Pro. Okay, thank goodness for the annotations that pop out. Coinbase Pro, because I always get confused because when you put GDEX, to me it's Gemini, right? I just would automatically think Gemini, but okay, anyway. So this is a USDC pairing, which is the stable coin at the moment for the US side. Whereas I think US side doesn't fully accept US dollar tether for some reason, because maybe it's from a compliance issue or whatever. But yeah, so that being said, 16,300 would be the price point that we see how supported Bitcoin will be. Now, favorable pullbacks is going to be scary, guys. If usually 0.618 Fibonacci ratio, right, is the golden ratio, as they say. So 0.382 would, to me, be the strong support. I don't feel that 16.3 will be a strong support. You'll see technical bounces to kind of whipsaw back and forth to kind of take out any longs or shorts, right? Like right now, I think anyone who's starting to short is probably in the money, right? Good for you, right? But shorting is always a high risk kind of play, especially in a crypto market, because like I said, you would make more money doing longs or staying in a long position than shorting, because shorting is just so short-lived overall. But yeah, year end, go ahead. I'm not doing it. I'm just putting out my thoughts here on where to buy. So 14,000 would be the first ideal place that I would put my initial order, where I would start, trying to see whether I can accumulate a little bit of Bitcoin at 14,000. But would I want to buy Bitcoin? I feel that the ROI is just not going to be there. Like, if you tell me that next year Bitcoin is going to go to maybe 30,000 or 50,000, right? What kind of catalyst would enable that? So let's talk about the catalyst. If institutions or corporate companies that have big reserve funds to spare, why would they really want to buy Bitcoin at the current price? It's not favorable for them. Nobody likes to be in a all-time high position. And I think if you are handling millions, we're talking about millions here in terms of reserve funds, to hundreds of millions in terms of reserve funds, you want to have a little bit of a backstory, or at least the technical charts or price history on where Bitcoin is at. Hence, they are not going to be buying up randomly for no reason without the ability to dump, right? Because when you start moving reserve funds, you need the whole board of directors come shareholders to agree and allow that to happen. It's not like the whole company at a whim can make that decision overnight. After you get everything signed and confirmed, you want to go and find a seller or a trader that can accommodate your order, right? It's not like you can buy off from the market easily. Now, even if you did, you wouldn't want to do it on your own, okay? So that's the thing. So guys, give me a second. I need to close the door for my kids' room. Alright, I'm back. Always, these days I don't do videos because of the children being too noisy. But you know what? Now that markets are getting a little bit more sensitive. They are at a higher price point. I think it's only good to kind of let people know my thoughts. So, okay, back to BTC. Now, when you buy BTC, I feel that it will be the first token or the first cryptocurrency that will be widely recognized. So from a mass market standpoint, if you're using Bitcoin as a form of transfer and buying, you don't need to care about the price, okay? You don't need to care about the price, but I don't think you're gonna get... The chances of you having any price appreciation from here is quite low because it's at the all-time high. But if Bitcoin decides to do a retracement of up to 30 to 40%, it becomes relatively attractive, but it's not going to be more attractive compared to other cryptocurrencies that are still at the lull or at the low point of the whole market, right? Because a lot of altcoins have not hit their all-time high. They are nowhere near their all-time high. Hence, the potential is there. But that being said, it doesn't mean that you should start accumulating every single thing out there, okay? Because historically, if you compare altcoins to a BTC, let's say if you're talking about BTC and an altcoin pairing, BTC always outperforms most altcoins. Like literally, mostly I think 95% to 99%, it outperforms every single thing. And that's the reality because the whole market is zooming in on BTC at the moment. But when BTC starts to become too expensive, right? And hence, expensive is just relative because it's always based on what the market perceives as expensive. If you see there's just so few buyers coming in at the current price point, it's just considered expensive because no one's willing to part with $17,900 per Bitcoin, especially if you had a run that is like this short. Now let's see the time frame. Okay, I'm always just interested to see the time frame. So 13th of March was the low for the year. Okay, that works out to about 4,658. That's the intraday. That's the low. Okay, and from March all the way until year to date, 30th of now it's already December already. So now it's already December. 17,865. So 17,865, $17,865 divided by 4,700 is a 3.8 times. So 380% increase in price for the largest cryptocurrency in the world. Okay, for the largest cryptocurrency in the world. Hence, for it to move 3.8 times, right? You are gonna see what is the likelihood of next year it doing that same multiple. It starts to get lower already, right? Because as much as the wallet, as much as the number of addresses are picking up, I don't feel that there's enough momentum really pushing the retail market in. Back in 2017, right, the retail market was driving the force. Okay, was the driving force. Now it becomes institutions. Institutions are just so much more careful. They are not going to be dumb enough to buy everything unless it's other people's money. If they are raising money from the investors that are, not very, savvy, right? And these investors obviously have just too much liquid cash, then obviously the buying could potentially continue. But it's just so disgusting if people are, if these hedge funds or family offices are buying Bitcoin at this price, it just doesn't make sense really. Like unless you can somehow build short positions, or that there are short positions or long positions that you can manipulate in your favor so that you can have more cash to buy Bitcoin. Because most of the time, right, all the current derivatives that are out there that can really take in millions to billions of dollars will always be the derivative market. Okay, so the millions to the, sorry about that. So the millions to the billions in terms of US dollars, right? Only the derivatives market can safely accommodate those large ticket orders. I don't really feel that the crypto market, right, can stomach, other than Bitcoin, can stomach even millions to billions of dollars. It's just not, it's not possible, right? Without driving the prices up crazily within the day. So the volatility should come down. The volume already is very, very low for the period, because everybody's gonna go for the holidays, and I mean it's COVID still, not like everyone's going to be traveling internationally, but at least internally, I would say that yes, there are going to be activities. People are going to wind down the year. I don't anticipate anything crazy. So like I said, for Bitcoin, let's look at the 16,300 and the 14,000. Now let's go to, very quickly, we go to Ethereum. Okay, so Ethereum is not looking too promising either. I would say that Ethereum and Bitcoin, right? So Ethereum and Bitcoin, in terms of Ethereum, the price movement wasn't as crazy because everyone was anticipating Ethereum 2.0, right? So now that the Ethereum 2.0 has already, kind of successfully launched, at least for a start, the beginning, okay, you're gonna see the market taper off as well. So for Ethereum, so same thing, 13-14 of March, which was also the same time frame. It was at $100, right? It was at $100, and it performed much better because it ended off at 600, a high of 600. So you had a 5x from the bottom to the top. Not everyone would have caught this. I would say that this would be the more the more sound period to start accumulating the 150s to the 200. Okay, then after that, the year took off and market started to be a bit more favorable. So even if you bought between the 150 to 200, you have already easily more than 2.5x your money, right? And at that point, you'll be thinking, wow, should I be taking profit at this point of time? You have deep in the money positions, especially for Ethereum. So you have the choice, right? Either you stake your deep in the money positions, or you would take profit, but you would be susceptible to short-term capital gains tax. So not everyone wants that, because short-term capital gains tax can go up to 40%, from what I've heard, right? Anywhere from 28 to 40%. So that's quite disgusting. It's quite a lot, right? Like, you make this very nice run, but then you have to give a portion of that profit to your government. So no one wants that. So the staking option suddenly becomes very attractive, where you can slowly accumulate 15 to 20%. Now this 15 to 20%, full disclaimer, is not confirmed, is not guaranteed, because as more and more people stake and become validator nodes for Ethereum, you're gonna see more. You would see the reward start going down and the difficulty start going up. Stuff like that. So yeah, it's not guaranteed, but it's still attractive compared to you putting your funds in the fixed deposit that gives you practically next to nothing. So yeah, these are the considerations. So for Ethereum, I covered that in the previous video already. So go and check out the previous video. I will probably put a little annotation for this if you're rewatching this somewhere at the top or somewhere at the bottom of this video. Go and watch that video. Yeah, so actually there's not much stuff that I can say at the moment. Year end, all I can say is keep it chill. Don't be too eager to buy, because every year, guys, look at, okay, so let's say you have, you had a June run up, 2019, okay, June 2019, then you have December. Okay, December it just drops. Look, we are having a good period now, but how long will this period take? So last year 2019, June to December was a downtrend. Then the beginning of the year we had a slight uptrend. Then we had a dip. Okay, so right now this whole year was bullish. Are we really gonna be continuously in a parabolic mode at the moment? The fact that it already crossed and went below the 20-day moving average, it doesn't mean that it cannot start crossing back upwards and start moving back up, but the chances are very, very slim. So a lot of profit taking, especially from most traders, are and should happen. Okay, from there you will see the price start to form, and then once it forms that new price support, that trend, then you can start taking nibbles on BTC or taking nibbles on Ethereum. But for now, I think both sides, I would say I'm more short-term to mid-term bearish, then but I'm always long-term bullish, right? Because you want to start accumulating your positions over time. You can't win this game if you have too short a time horizon. Nobody wins. I have never seen someone with a very short time frame, they kill it in the market these days, because you're either gambling with the total capital that you have with high leverage. Hence, you can win a lot, but at some point you get taken out by the market because your mentality is already incorrect. If you were to leverage, I would say 3x is the most that you can go, right? But if you go 5x is already pushing it already, because a 10% movement would make it 50% in terms of your upswing or your downswing. 50%. That means your capital at risk is 50. You can make 50% or you can lose 50%. It depends on your overall position sizing and the amount of capital that you have dedicated to that margin account. So I wouldn't recommend it. For folks who have no idea what I'm talking about, stick to the plain vanilla buy great entries and hold. So my videos will be more regular for at least the first 3 to 6 months, at least to allow folks to identify the market a little bit better. So if you feel that you would like to start buying, you probably want to subscribe to the channel. So from there, you kind of identify, okay, Ethereum, where is it at? Bitcoin, where is it at? Because it takes time for you to learn the basic technical analysis. I'm not using very difficult stuff. Anyone who watches my videos understands that it's simple, it's easy to understand. It's all based on simple charting tools, nothing too complex, not looking at on-chain analysis or all that. I feel that on-chain analysis is great if you're speculating on altcoins, whereas the altcoins market in the DeFi space, you kind of want to watch the money flow, as they say, right? But money flow can be manipulated by small groups, because in DeFi, okay, or decentralized finance exchanges, right, the money flow is kind of easy to track because you can see the ERC tokens moving back and forth from one address to another. But it doesn't really mean much all the time. You can try to speculate and anticipate and try to get some news, but it's very high risk, because the moment they pull the rug on that particular movement, the price just tanks drastically, and you're using a decentralized exchange. So when you're using a decentralized exchange, right, you don't have limit orders. You can't set a limit order. You're basing it on whatever availability on the book. So the spreads can be quite horrible. So if the movement is crazy, obviously you don't care about the spread anymore. The spread just basically means the bid and offer price. So how tight the spread is. So if you're on, let's say you're trading, let's say for example, Bitcoin now trades 17,916 and 17,915. That's the spread. The spreads can be very tight. The tighter the spreads, the better for you. The wider the spreads, right, means that the buy sell is just quite off and you're susceptible to slippage. So all these things are more technical. I don't want to get into it. I want to keep things simple for everybody. Just looking at it, I wouldn't buy Bitcoin at the moment. Neither would I want to buy Ethereum that much at the moment as well. I would rather hold off and then, okay, gradually get in. And yeah, there's no urgency. Keep it chill, enjoy the holidays with the friends and family. And yeah, COVID is still around, and so stay vigilant, keep everybody safe, and I'll see you in the next live stream and live video, guys. Take care.